I'm Nicholas Penrake, and you're listening to A Trader's Life, the podcast where I get to talk to successful traders about their approach to trading, how they started out and went from broke or breaking even to pulling in thousands of dollars a week. Trading is a tough game. They say only around 5% of those who try actually make a profit. Join me for A Trader's Life to glean some valuable insights from the market wizards I get to talk to. So I have with me today Cecil Laurens, a trader based out of South Africa. How are you doing, Cecil?
I'm doing fine, thank you. Nick, yourself?
Yeah, good. Yeah, very sticky here in London, but fine otherwise. So, yeah, diving straight in, how did you get into trading to begin with?
I was introduced to currency trading back in probably 1994, 1995, around there. And as engineer, I think a currency trader or someone that's trying to sell this idea, it's very easy to sell to engineers. We like to simulate stuff in Excel. So you go in Excel and you simulate, just 10 pips a day, every day, and you account is so much, and you start doubling down, taking two contracts, etc., like that, and you go, wow, in something like 5 years, you're a millionaire, dollar millionaire, and
Yeah.
it's like.
And then suddenly you got nothing.
8 months you resign your job, and you're like, wow, this is amazing.
Yeah.
And then you hooked into currency trading, and that's what happened. So, and there was quite a number of our engineers. We all got hooked into currency trading. You open your first account, you start trading, and it's simple. The first two trades, you make a lot. No, not only 10 pips a day, you make like 60 pips a day. And then you really think this is easy, I'm not going to make it. And then you hit your first loss. And and you've never learned to handle the loss. You never learned the psychology behind, and so that's a devastating loss. And then you sit back and you're like, geez, what happened now? So, and then you're down like 300 pips, and so that's why it started for me. It started as a currency trading thing, and then I said, wait a minute, I need education here, and you went into some trading courses to get better at it, and but anyway, that was the start for me.
Yeah. And so what sort of size account did you start off with?
I started, I think at that time it was $3,000, and that was the platform requirement. You had to invest a minimum of $3,000, and that's what we started off. And of course, in those days, you didn't have these mini contracts. Nowadays you've got mini contracts where you can risk like $1 per tick. In those days, it was $10 a tick. It's a full standard contract.
Yeah, it's then the losses really mount up pretty quickly, don't they?
It does.
Yeah.
It does.
Yeah. You were trading Forex only, or commodities, futures?
No, at that point in time, it was Forex.
Just
so
Forex, yeah.
And there was quite a number of Forex companies in the country, all overseas companies that opened. And they opened offices, all over the place. So, and they advertised big time, So it was Forex pairs that we traded. I remember the first trading course I took. I paid some. After you took some losses, I went to a trading course, and we were all, the teacher was late. And by about half an hour, we were all waiting in the foyer and said, listen, where is this guy? Then he arrives in this big red sports car, and he's waving at everybody, and he pulls in, big image. And they gave the training course, and for the first couple of days, this guy's sort of getting into everyone, and so listen, this is wrong, and this is wrong. Everything, all your approaches are wrong. But that training course ended with a 3-day live trading session. So each of us had to have a live account ready, and we were all trading, and they've got this method of you look at the hourly chart, and there's a moving average that has to cross, and then there's a MACD on a 15-minute chart, and an RSI, and I don't know, whatever, a combination of things. I can't remember it all. And so for 3 days we sat there. The first 2 days there's not a single trading signal and nothing, not in any currency pair. On the third day, it was the last day, the Friday morning, they had like a signal, and and they said, okay, get ready. And to the point, the guy said, okay, now buy. And you buy according to your risk profile, whatever your account size is. And
Yeah.
we were into the trade less than 2 minutes. They split the class into two. And the guy from next door, from the other class, came running. No, don't buy. It's not a real signal. And we're like, what? We just bought based on your system. We just bought. We're all into the market. No, it's not a real system. You should get out again. So we all took a loss there, and then they extended it. So next week you can come back for free, for extra trading. Sorry, nothing. There was nothing in these 3 days, and so later on I realized that was just a big show. That
Okay.
guy, that red flat car that he had, that was a rented car.
Real comedy, just a bit of a scam, and you didn't really know much at all.
That's it. So the guy, he traded in some exchange, for some big company, and he didn't make a big success out of it. So then he started doing this trading thing, and that guy rented it for the show, and that's why he was late. He wanted everyone to be there when he arrived.
Yeah, yeah.
But that came out like 2-3 years later. So when some of my friends went through the same experience, I said, wait a minute, this is a pattern. There's something's wrong here. And that's the experience that I had in that market. It's there's a lot of hype about methods that you can use, and every time that you lose, you start looking for a new method. You start looking, but there must be something new. There must be something I'm missing. Why am I losing? And that went on for quite a while. So I think of all my friends. Um, uh, I'm the only one that survived, so I
Wow.
didn't
Okay.
really grow my account. Well, I didn't lose a lot, so I came out at about break even, so at the end of it, I was still at $3,000. But all my engineering friends, anyway, none of them survived. They
Yeah,
all
yeah,
quit at some point. They said, no, this
yeah.
is not for them, and went on with the engineering life. So that was my experience. So later on, I did some CFD trading, so
Mhm.
contracts for difference on the stocks. Um, it wasn't until probably early 2000s that I discovered commodities.
Yeah.
And but with my small account, commodities was something that was hard to trade. So you remember the currency trade. You're sitting in South Africa. You've got the account in, what's it, Isle of Man in the UK, and you're trading forex. But they don't have commodities available on that platform.
Okay.
So for me to be able to trade commodities was like, where do you go to trade commodities? And that was always a question. So it took me a while to get into commodities.
Yeah, yeah. And what did you start with once you got into commodities?
Okay, so that story is different. So I tried this currency thing until about 2007. So I have to also say I'm a full-time engineer, so for me trading was always a part-time affair. It's something I do, afternoons, when you have time. And it always mixes in with your engineering life, with your real life. The market, I think the market has got eyes. They're
Right.
watching you. The market knows exactly when your manager is going to call all the engineers into a
Yeah.
meeting room for
And
a
then they
meeting.
screw you over.
And
Yeah.
then it moves in, So now
Yeah.
you're in a meeting and you just went into the market, you're worrying about your stop loss, and your attention is you have to attend to your job, but simultaneously you are worried about this currency because you can't watch the market now, and you don't know what's happening, and you get out of the meeting and you find, no, it run, it gave you your $300, $400, but then it turned around, it came all the way back down and you're sitting with a $200 loss. And you're like, but if it wasn't for the meeting, you could have taken profit up
Yeah,
there,
yeah.
you know. So, and that was always a thing for me. So the market somehow knows this. They know when you go in meetings, you know.
Yeah,
The
Cecil's
market
on the
knows.
phone. Let's screw him over. Yeah.
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 So it was for me. It was, oh my word, you know. So it was a horrible experience because you can't, you don't have the income yet to do trading full time.
Yeah.
You know, and so you have to do your engineering job in between, and to try and balance your trading life and your working life. That for me was a huge challenge. You know, so I remember then. So on one holiday, I started looking at some books. You know, and we had our own company in around from '94 to around 99. We had our own software company, you know, and at some point we appointed a marketing manager, and he gave me some books written by Mr. Joe Ross. You know, so and I first studied a lot of other books, and then I started finally studying this books that this guy gave me. And Joe only traded commodities, you know. So and from there, I said, listen, but I'd like to trade these commodities things. They look less volatile than the currencies things for me, you know, and I understand them a bit better after reading those books. But it was only until about 2004, probably, before I was able to open an account in the United States in New York, and then I was able to start trading currencies, not currencies, commodities. And I was looking at you know, mainly your wheat complex, your grains, you know, wheat and corn and
Yeah.
soybeans and that stuff. So I was
Yeah.
still too scared to try my hand at crude oil or natural gas, you know. And so I started trading that on the futures market. But more or less the same success as on Forex.
Yeah. Yeah.
Yeah. So
Yeah. Did you carry on with Forex at the same time, or like split the two in terms of account size?
no, I think what happened to me was I reached a turning point in 2007. You know, so in 2007, we just finished a huge engineering project. You know, it was we finished the first phase of a huge engineering project, and I took a holiday, and during that holiday, I took a trading course on options. Um, so I remember $2,100 that I had to pay for the training course, plus then airfare and accommodation and all that stuff. Luckily, the guy was in Cape Town. You know, I'm up in Johannesburg in South Africa, so the guy was in Cape Town. So it's just an internal flight.
Yeah.
You know, and I took that training course in options, and that changed the whole thing for me. So remember, from '94 until 2007, that's about roughly 13 years. Um, I was trading forex, and the last 3 or 4 years I was trading commodities. You know, and I tried CFDs in between, but I didn't really grow. My account just, you know, I had 3,000 and up and down. You know, you make some money, and then you make some good progress, and then you lose it all in one transaction. And then, oh my word, you know, then you
Yeah.
start over again.
Yeah. Yeah. I know.
And yeah,
Yeah.
so for me that was the history. So until I took that options course, you know, and that was a 3-day hands-on training course in options, and that changed the entire ball game for me. You know, so after that I moved. You know, I stopped trading currencies altogether, and I moved onto commodity. Okay, so that's maybe um, so after that, I realized that currencies, the way that I've been trading them in currency pairs, you know, and they call that spread trading. That's not actually the real thing, you know. So the real currencies are being traded on a COMEX in New York on a commercial exchange, you know, and those are big contracts. Those are your major contracts. So if you buy a US dollar, Great British Pound contract, that's $100,000 worth of I think it was £100,000 worth of dollars, you know. And for the GBP and for the euro, it's $100,000 worth of euro, etc. You know, so those were the big contracts. So remember later in '94, we only had to were allowed to trade those major contracts. And later on, we were allowed to trade the mini contracts. So you could reduce your risk. But so the moment I started on the commodities, I realized that there is currencies in the commodities available, but they're all major contracts, and it's all US dollar versus whatever currency you have. And I said there's a good 7 or 8 currencies that I could trade that way. And it's also there that I realized during commodity trading that I discovered, what. But the commodity base called spread trading, that's a risk reducing technique. So for example, you can spread corn against soybeans. You go long corn and you go short soybeans, because they move in unison. That's a technique whereby you can reduce the risk in a trade, drastically reduce the risk. And exactly the same now if you do this in currency. So if you go long British pound and short euro, then actually you're trading the pound euro pair. And any of those commodities you could combine in that fashion. So you go long Swiss franc and go short Australian dollar, and then you're actually trading Australian dollar Swiss franc pair. So I continued trading current Forex, yes, but on the commodities markets. And so from then onwards, I focused exclusively on commodities. So that the trading course that I took, that gave me access to a spreadsheet that this guy developed. The guy was in South Africa, so he developed this spreadsheet, and that had, I think, a list of 41 commodities. If you go in something like bar chart today, it's just the major commodities that you see on bar chart, in barchart.com. So it's the grains, softs, energies, and currencies. Some indexes, metals, and gold and silver and stuff. And some meat. Lean hogs and feeder cattle and those type of things. And I just found the trading with options was a game changer for me. So because with the options, suddenly I was allowed to step away from my computer. I could enter an option contract, and suddenly my chart from which I trade is a day chart, daily chart. My long term chart is a weekly chart. So now I do my analysis late in the afternoon after work, and I can set up the position on my mobile phone at work when I'm ready to enter. And once you enter it, there's no use watching the market. The option is a delta of 0.1, so you only take 0.1 of the movement size in the market. So if a currency moves by $10 a tick, suddenly you're down to $1 a tick, and you can leave this option for days. So and that gave me the ability to now say, wait, now I can position trade. So I identify certain trends, and I was like, I'm in for the long term trend here. So the daily, the intraday movement of this currency pair, I've got no concern in what that will be. I'm in this for the long term. And so suddenly I had the ability to step away, so I could analyze my positions in the afternoon. Sometimes there's off trade possibilities, and sometimes there's nothing, then you wait patiently until there's opportunity. Then you set up your options and you're into the market, and then you can close your computer screen and you walk away from the trade, and now suddenly I could carry on with my engineering life.
Yeah.
And
So has
none
that
of
reduced your losses? I imagine it has.
it has, So
Yeah.
since then, for the first time, I was able to start growing my account. So I had a net growth on account for well, from then until current. So I still do take losses. From time to time, I do something stupid. And like
Yeah.
about my crude oil trade.
Yeah.
So
Yeah. You tell me. Yeah.
in
Yeah.
crude oil, that was when crude oil dipped negative.
Yeah. Yeah. God. Yeah.
So
It's terrible.
I was of the firm belief it's impossible for crude to go negative. So I traded options on crude with that belief. And then it went haywire.
Yeah. Yeah.
Anyway, so I still do take losses, but I was also at this. I've never traded a demo account or a simulated account. So I tried it a long time ago. I tried trading a simulated account, but I found that the emotional aspect is missing when you trade a demo. While when you trade live, there's a huge emotional aspect into the trading. So all my experimentation that I did in trading, I did on a live account. I went small, small or far out of my options, and then everything I wanted to experiment with, I did live, so that you have that emotional aspect to the trade.
Yeah. How do you cope with the stress and disappointment of losses? What do you
Not
have a sort of technique almost, or is it something you over the years you've been able to manage? You have a sort of way of distracting yourself and taking a step back?
um, no, not really. I struggled in my life. I struggled with the losses. For
Mm,
me, it's a huge emotional drain on my system.
yeah.
So recently, let's just step back. So in 2007, I started trading that course. In 2008, the economic crisis hit the world. I luckily closed my account in the United States. I moved my money back to South Africa, and we had, I started a small business in archery actually. And I had a contract in because I did a contract in the Netherlands, for a year in my engineering life. So I made contact with the export of archery equipment because the Netherlands are big in archery, Olympic archery. So I made contact that side, and we started the archery business in South Africa, and I moved my money into the archery business during that economic lockdown, not lockdown, economic, what do we call it, meltdown period. And it's about 2012 again that I opened the account in the United States again, and I started trading. So, and it's also when I started trading options, you went for the option trading course, and now you've got this new technique. And, you're like, but what now? Which markets do you enter? How do you know which to trade? I went back to my mentor. Now, my mentor is Alan Perry. You might know about him, Alan Perry.
Yeah.
Um, he lost his job at age 52, and since then he only traded. He was a full-time trader. He's now, I think, 89 years of age. And he's been trading full time ever since. So he
Yeah.
supported himself and his wife since age 52 just by trading options. So I went back to him for guidance. And he gave me the strangest guidance of all. He said, "Listen, just trade, and hopefully you don't take too many losses."
Yeah.
And I like, dude, that's not what I asked.
Yeah.
I,
Yeah.
I,
Yeah.
I I
That's
wanted to
easy then.
know. Yeah.
Yeah. Yeah. Just don't
So,
take too many losses. That's all.
yeah, let's hope you don't take too many losses.
Yeah. Yeah.
It's only years later that I realized the wisdom of what you were saying. So
Yeah.
there are so many strategies that you can apply trading options. The software that I created, there's more than between 40 and 50 trading strategies for options. You know, um, and every one of those strategies, it depends on your makeup. It depends on how you handle that question that you just asked me. How do you handle risk? How do you handle the loss side of things? It depends on that. It depends on how you respond to events in the market. What is your risk profile like? Do you like to have open-ended risk or not? Are you in short term? There's a lot of things that you have to consider. What's your account size? It's a major one. What type of account do you trade with?
Yeah. Yeah.
And he said, in the end, what I gathered is because of all those um, uncertainties, that he can't give you a guidance because the way that he trades will differ entirely from the way that you trade. And that's why you have to try these different strategies by yourself until you find what works for yourself. And that's what he told me. Try out different strategies. Hopefully, you don't lose too much money. When you find what works for you, then start doubling down.
Yeah.
And then that's what I did for a couple of years. So it took me a while, and then I realized, listen, wait a minute, this is what worked for me. So currently we on a, with Richard himself, we on a a strategy that we really limit risk. I know for myself that I struggle with this loss-taking thing.
Yeah,
I
yeah.
struggle with big losses. It sets me back emotionally. And then for 3 months, I may not trade. I may not return to the market because I'm still, I'm angry at myself. It's a combination of being angry at myself and I'm really,
Yeah, your confidence is shattered,
how
isn't it, for a while?
yeah, so how do I get this loss back? Now first you
Yeah,
have to
yeah.
get this loss back before you can grow
Yeah.
again.
Yeah,
So
exactly. Yeah.
and that sort of looking at all that, I then said, wait a minute, let's avoid these high risk trades. So I made a lot of money taking high risk trades, but now I've lost as well. So and then I started saying, you know what, it's not the emotional drain on my system. It's not worth the while to take these high risk trades.
Yeah.
Let's evaluate trading strategies that's much lower risk. And that's what we did, working with Richard as well. So Richard is a technical analysis expert, and you've seen some of his own work. I'm not that much, I read the chart. So I don't use any indicators whatsoever. I just need a bar chart, nothing else. So I read the bar chart like a book. For me, everything I need to know is in that bar chart, um, so, and then I discovered Richard, and he's got an entirely different approach in the market. So he's looking at pitchforks and Fibonacci's, and he really understands Elliott wave techniques. And those in the end for me, so I don't have that full understanding. But when we came together, we said, wait a minute, let's develop a technique where if I analyze a market and I find an opportunity, I will pass that on to Richard. And then he analyzes the same market and makes his own independent. So I'm not telling him what I think the market will do. I just listen, look for me at this market. Let's say the Great British Pound. So look at GBP for me. I've got a certain opinion. Then he makes his own analysis. And if my apologies, if both of us agree on the direction the market wants to enter, then I formulate the options trading strategy, and we time the market based on a bar chart on my techniques, and then we enter. And that really worked for us. If you look on our website, I think you'll see there's for the last year we did something like 17 trades, of which 4 were losers, the rest were all winning. And we traded crude oil, we traded natural gas, we traded gold, we traded all these commodities that's usually too high risk. We traded with a very low risk strategy, and it worked. So that the technique of him analyzing the market and finding a direction, and me analyzing the market and finding a direction, and only if we agree do we enter. That technique really works well for us. And so for me, it really evolved, from initially I took much higher risk trades, and there's a lot of guys that does this. They go short on options and they move far out. If you look at crude oil, they might go and sell the crude oil currently trading at 40. They might sell a 60 or a 70 strike call, which is far out of the money. And they will sell like a $20 strike put, which is also far out of the money. But to be able to make the premium, you need to move a long term out. So now you look at a 6 months to maybe 8 months time period for to expiry. But you far out on both sides. You monitor the market, and there's many guys that know that still trades that way. But I and for a long time that was my favorite technique, was to do something like that. My biggest growth, my account came from this period when I was taking those type of trades. I said, no, you get these trades, you get into trouble, and on one side of that trade. And that emotional drain on you, because suddenly, previously I was able to step away from the market. Now I get in trouble in one of those sides, and either it's moving up or down, and now you suddenly watching the market intraday again. and you're back into this thing of kind of meeting, I'm in trouble here. And I just looked at all that and said, no, you dude, you're killing yourself here. Step away from that. And so now I've developed quite a number of these techniques, and I tried them out on my live trading account, and I found new ways of doing this. So right now, let me give you an example. The crude oil, I could say, it's $8,000 margin to sell an option. I sell an option for $1,600. So my maximum profit is 1,600 on an $8,000 margin. That's what's 20%. Growth. I can make 20% on margin on this trade. There's like 60 days left until expiry, and that's a trade I take. But I've got unlimited loss potential. Um, but you make money if the market stays level, and you make money if the market goes like up. So it's only if the market goes down that you will lose. So you monitor it every day, but you're far away, so it's relatively okay. So you monitor that. However, now I develop a technique. So if you go into a bear spread, I can set up a trade. Now I trade 6 contracts. If you win, you make $1,800. Your margin is $1,500. So now you have, if you make money, if you're correct, it's 1,800 on 1,500 margin. That's more than 100% return. The maximum risk you're taking is 1,500. You can't lose more than 1,500 on this trade. And so that's a much lower risk trade, but now the market has to move up. So if the market stays level, you lose. If the market has to move up, and so that's the negative side of it. So suddenly you have to have a directional market, but you've drastically reduced risk. So risk is $1,500 maximum. You don't have to take that. The moment that you see the market is not moving up, then you get out of the trade, and then you take like $100 loss. So a very low risk trade. If you're right, you make more than 100% on margin. And that strategy for me is much better than my previous strategy where I went short on a naked short option. And we've adapted. So my whole trading adapted to this type of strategy. Gives me more managing opportunities, and I just like it. And then a combination of Richard, that's really what's making the breakthrough, because remember, I need direction now. And so if Richard and my analysis coincide, then we know direction is a high probability. And then we take the trade, and that really works. So, and I think that's the progression that happened in my trading life, So I'm now at that point to say, no, I really want to trade low risk strategies only. You would have, the way that we met, I had this strategy on the currencies that I trade. That's also a low risk strategy, So that's a strategy. You take a bit of risk, still limited risk in the start of the strategy. But if the market moves only a little bit in the right direction, you bring that trade to a risk-free position. And once it's risk free means I cannot lose. If the market moves the wrong direction, I can't lose. I'm taking a profit on the trade regardless of what the market does. And once you're in that position, then it's really it's great to be there, because I can now sell currency, and I can buy the currency. I can do whatever I like. I can buy, and then obviously, there's a certain direction. If it moves a certain direction, then you go into your territory where you can't really recover. You're making $100, but you really can't make more than $100. And once you reach at that point, you say, "Well, I've messed up this trade. I'm in a region of only taking $100, and I can't get out of this. So let's take the $100 and get out of the trade. But you're still making $100. While if you manage it correctly, you in that other region where you very quickly start accumulating profits. So if you get it right, you risk that bottom line that's sitting at $100. You raise that to $300. So now you can't lose. You will make $300 guaranteed. And if you again get it right with the next swing, then you raise that to
Yeah.
$700, etc. So
Yeah.
and that's what I really like about that training technique. It's difficult to set up right at the start. So I've made some adjustments to it to make it easier to enter. So you take a little bit more risk, but it's easier to enter in the technique. And I think, but that's where I am. I'm at the stage of looking at all the strategies that I've accumulated over the years and say, how can I change these strategies to risk-free strategies or low-risk strategies? How do I take the things that I felt is really great for me, that's just gelling with my personality? How do I take those trades and convert them into low-risk trades? And that for me is the challenge. And um, so last year, the whole of last year, we started some of these low risk strategies, and it really worked. I had big account growth before, but now suddenly I start growing in a very consistent way.
Yeah, that's the important thing, isn't it? Consistency. Yeah, yeah. And so you and Richard run a course, don't you? I mean, or maybe even several courses. How do you operate in the moment?
I think the main thing for us was, there's such a lot of false information or misinformation in the market. And Richard and I decided, let's break out of that. Let's tell the guy everything he needs to know to start his own successful trading business. So all the information are available, and that was the idea behind the newsletter as well. To say, um, when I started trading, remember that advice that my trainer gave me, my mentor gave me. So we started the newsletter with the idea of, at least I can show you the way that I trade. These trades are working for me. If you follow these advice, they might work for you. But what I try to do in the newsletter now, let me give you different ideas. So some of these I know might not work the best, but let's give you the idea on a newsletter, and you can evaluate whether this works for you or not. So that was the idea behind the newsletter, and then the training course is really everything. There's, I think, 26 chapters of stuff. Everything that you need to know about options, everything that you need to know about risk management and the management techniques we're using. That's all in that option course. And that is now what I'm now shooting the videos. So we've started with that. I've now got a whole setup here in my, I want to say, lodge. It looks like a holiday, a game lodge that I'm staying. With the grass, the thatched roof place. Anyway, I set up a whole recording area here, and I'm now shooting. So I'm converting that the entire course into video series. The same with this trading currencies, this currency technique of getting to a risk-free trade. And I'll probably start with that first. Yeah, so we're shooting all of that into videos, and the idea is to then say to the guy, listen, here's the whole series. Now you must remember that training course for me was a 3-day trading course. And to make them into videos, you're talking about short videos, 15-minute videos, but there's going to be a lot of videos. It's a huge amount of information that you need to give the guy. So we'll probably break it down into smaller courses, and then someone can decide, how much does he want how far does he want to go? If he doesn't like the material. So there's a lot of these information is available for free. You can go into almost any brokerage site, broker website, and you will find training courses and options for free. But that's what I found in those courses. There's so much jargon they're using, so much complexity that they're adding to the course that is completely unnecessary. There's a huge number of stuff in options that you're never going to use in your trading life. Academic in nature, they go into all the Greeks and stuff in all this detail, and you're overwhelming the guy. And we said, no, let's break out of that. So you'll see if you go into our training course, it's a really we simplified all that. And and the focus on the trading course is how do we use this information to build a business? What? So I'll be quite frank in the trading course to tell our guys, there is this factor that you may hear about, but really I have in since 2007, in 13 years, I've never found a way to gain any useful information from this bit of information that you've got. Therefore, this is the way that I handle this thing. It's a very nonchalant way of saying, I this is not important. Let's be aware of it, because when you read other courses and you go on other websites, you'll find people talking about it. So let's be aware of what it means. But in terms of trading, there's nothing significant here. So let's not spend too much time on it. And that's what we try to do in a trading course, is to break things down. And the only, shall I say, negative side for me is that traders nowadays are lazy. They don't want to learn stuff. They want me to tell them, enter this market now at this price. And then they want to do nothing, and then yeah, then they want to do nothing, and then I have to tell them, listen, now you have to exit. And if they then take a loss, it's no, but you to blame. I'm to blame. It's my fault that they've taken the loss. And I'm like, how do you argue that out? I'm sitting in South Africa. When the US markets open, 8 o'clock in the morning in the United States, it's a much different time for myself. You know, when I take a trade South African time, at 9 o'clock in the morning, you are fast asleep. It's the middle of the night for you. So, how do you expect me to now give you, tell you, listen, you must enter now, and then you miss it, or worse. I look at the market and I say, oh boy, this market's going wrong direction. Okay, exit. Let's get out of this market. Let's keep our losses small. Let's get out of the market. So I'm telling you to get out. It's only 6 hours later that you wake up and you see that information, and then you exit, and then you exit at a huge loss. And now I'm to blame. so, so that for me is it's the bad side of it. So people are lazy, and what we're trying to tell them is, no, we're not giving advice as to what trades to take. We teaching you the basics. You have to understand how options work, and you have to be able to understand what is price going to do to me, what is a bad news report going to do to me. You have to understand these things. And once you understand that, then you can take your own decisions in the market, and you can decide when you want to enter and when you want to exit. If you look at the newsletter, for example, I tend to do in a newsletter tell a guy, here's an aggressive strategy that you can use. So if you want to be aggressive, you want to take more risk, here's a way to trade the market. And then I'll add the second strategy into the newsletter. So here's a more conservative strategy. So if you don't like the risk aspect, then this is the way to trade. I'm going to trade this market in one of these two ways. But I'm not going to tell you which way I'm going to implement. But here are two strategies, two ways of managing it, and I'm telling you, listen, this is how you manage your strategy going forward. And then a guy has to make up his mind as to what he wants to do. But to be able to do that, he needs that knowledge, that the option course gives him. So we struggling a bit there on that front. Most people are, as I say, they're lazy. They don't want to learn.
Yeah. Do you get talking to them one to one, like on a Zoom or through email or chat or yeah? So your students, if you will, do you get talking to them one to one about their trades and strategies?
Well, we don't have a channel. We've got a feedback forum, that I use. So the guy are able to get onto the forum and say, listen, I'd like to ask a question about this strategy. And then I'll respond. So I've got that open on my PC almost all the time. So if someone asks a question there, it's very quickly that I'll come in and reply to say, listen, how to handle the situation. So that's part of the service. That's part of the thing that's saying, listen, I want to teach you how to do this. I want you to run a successful business. So that's all. We don't prescribe any broker or anything. So you decide, where you want to trade, how you want to trade. That's all up to you. What size account you want to open. Lately we've went into, there's a lot of guys that When I had to open the account for the commodities market back in 2011, just after the 2012, just after the economic meltdown, I had to open an account with 10,000 US. And that was the minimum account they allowed for me to be able to trade options and commodities. There's a lot of guys nowadays that say we don't have $10,000 to put into an account. Yeah, so I want to start with $500, or I want to start with $2,000, $3,000. That's the maximum I can afford. And so the last focus that Richard and I had was to say, listen, how do you assist a guy with small accounts to get into trading commodities? So we've looked at some brokers. There are brokers that will allow you to open an account. That's small account, small size accounts, and how can I adjust strategies or formulate strategies to help those guys to grow their accounts? And this is one strategy I just mentioned to you, the spread that they're using. That is an excellent strategy to use. So I can buy 2 contracts in oil and my margin is less than $500 using a spread trade. And if you're right, you grow that account pretty fast. And so we started focusing on that. And much of what we nowadays do is to say, we're all focusing on how to assist a guy with a small account to start trading options and to get it right, to grow that account of his, so that he's able to trade the more or the bigger contracts, the bigger strategies. So a lot of attention is on that. So yeah.
Yeah. And have you found trading during these pandemic months more tricky or more profitable?
I stopped.
Or not?
I stopped trading probably at the end of March. And then I just stepped away from the markets, and right now I'm big time into it again, But since end of March, I stepped away from the markets.
That would be when the oil just
that
went
is
through the floor,
oil was
right?
in April.
Yeah.
Yeah, I was not. I was trading the May contract in oil though, so the May contract never went negative, but I still I burnt my fingers there. But it's around there that I stepped away. So it's partly maybe the oil trade scared me away from the market, but also I looked at this markets during this extremely volatile time. And Richard looked at his analysis, and it's crazy, So Richard's analysis and my analysis, we looked at that and said, we can't determine direction. This it is changing so fast. We can say, these things look like it's dropping, but it's dropping so fast, and it makes such big moves. If you try to enter a strategy, you might actually wipe out um, um, in one trade in one day. So you suddenly you can't step away from the market anymore. And so we said, no, listen, let's just leave it. And we've left it until recently, and now we started looking at the markets again. We've got some trades going, and I've got a lot of time now.
Are you finding it's less volatile, or
Oil. If you look at oil as an example, oil went through that huge dip where it went negative. I think -42 was the lowest it went, and then started building up again. And now for the last 2 months, oil is going nowhere. It's sitting at 40, and it's 40, 42, 41, 42, 39, 38. It's sitting in that range. It's doing nothing. So there's still big daily moves, but the volatility is down. Gold for me has been steadily going up. So it's not extremely volatile. They're not these big swings that it makes, and the same in the Standard & Poor, the E-mini. It went through the same huge dip, extreme market moves, and now it's much more calm. It's directional. So for me now, it's fine. And even the currencies, for me, it's not a big thing anymore. It's not those wild swings that it did. It did. And so now we're starting again. So I'm starting, and I actually told Richard that since yesterday was a holiday in South Africa. Since yesterday, we are focusing now again on low risk strategies, back into, how do we get small accounts to grow their things. We're back into the whole ball game there, in between me shooting training videos.
Good. Right. Yeah, well, anyone listening should look out for your courses, on options and low risk trades, because especially if you're new to trading, it's pretty much what most of us need, right? Especially, the first 2 months, 3 months, you're probably suffering more losses than gaining. So yeah, I think any kind of help like that would be
Nick.
great.
Yeah, for me, that was the major stumbling block, in a learning curve was that I needed someone to hold my hand during those years.
Yeah, I think most of us do. Just one or two natural born talents, perhaps, but I think most of us get a real battering in the first few months. And
So that was the major idea, and it's unfortunate that the website that we created hasn't grown that fast, and I think that will change, but people hasn't made use of the service, because we are there on. If you look at the forum, we are on the forum to say,
Yeah.
any question, ask us anything about any trade.
Yeah.
Obviously, and if you have a currency trade, I can give you only limited experience. If you have an options trade, I can give you a lot of advice. But if you've got a trade and you want to ask something, ask on the forum. I'll let you know. So I mean, you yourself had some questions, and I wrote a whole section on the forum just to explain all of that. So I'm very quick. But simultaneously, I need the guy on the other side to say, okay, so I understand this, but what about this? And then if you have a discussion like that, so we open for that. And that's really the passion that Richard and I have. So let's teach people to make this business and to make it work. So so I'm looking forward to that. So for me, I've never been this huge successful trader. I've never been working on something like Wall Street or one of these major trading companies. Well, there's nothing like that in South Africa. No one trades commodities. None of the big banks. I don't know if some of the big banks do trade commodities, but they don't look at you. You've got an engineering degree, not financial degree and something. So for me, it was not that. But in my trading life, I can say, I try to strike that balance between a working life and trading. And I think that I sort of got right, So and that's the main thing for us.
I'll be looking out for new developments. Yeah, good. Yeah.
No, thank you, Nicholas. Yeah, I appreciate. Yeah, you look forward to this new material, and then of course I quickly mentioned to you this new method. So I think we found a way, for the newsletter to distribute that on a smart device, smartphone. And I want to do the same with the training courses to make them available on your smartphone. You can just look at them whenever you've got time, and avoid. So instead of you paying $400 for the course once off, you pay like as you go along. And you decide, listen, do you want to pay more and continue the rest of the course or not? And I just found a way. I have to discuss it today with a guy in the UK.
Yeah, well, anyone listening should look out for your courses, on options and low risk trades, because especially if you're new to trading, it's pretty much what most of us need, right? Especially, the first 2 months, 3 months, you're probably suffering more losses than gaining. So yeah, I think any kind of help like that would be great.
Thank you for the opportunity, Nick. I appreciate it. It's nice talking to you.
Right. Well, thanks for talking to me, Cecil, and good luck with the new material on the course. Before we wind this up, just to let you know, you can find the forum Cecil was referring to earlier at youroptionsforecast.com. Bye for now.